Welcome to Money Map Studios, your guide to building smarter money habits, growing wealth, and unlocking financial freedom. Whether you're just starting your financial journey or looking for new ways to grow, you're in the right place. Here, we break down complex ideas into simple, practical steps you can use right away. From saving strategies to passive income to the latest money trends, we've got you covered. So, grab a notebook, hit that subscribe button, and let's map out your path to financial success together.
Crypto is not dead. In fact, in 2025, it's bigger than ever. But here's the brutal truth. Most beginners jumping in right now will lose money. Not because crypto is a scam, but because the rules have changed, and no one's telling you the safe way to play this game anymore.
Safe way? That sounds boring. If you play too safe, you'll miss out on the insane gains. Bitcoin just touched new highs this year, and the people who ignored caution made life-changing money. So why hold beginners back?
That's exactly the problem. Everyone sold the dream. Buy now, get rich tomorrow. But here's the uncomfortable truth. 90% of new investors lose because they treat crypto like a lottery ticket instead of an investment tool.
All right, but you can't deny that in 2025, crypto isn't fringe anymore. We've got governments regulating it, major banks offering custody services, and even retirement funds dipping into Bitcoin and Ethereum. This isn't the Wild West anymore.
Correction. It's the Wild West wearing a suit. Yes, regulation's here, but regulation doesn't mean safety. Just because your bank lets you buy Ethereum inside their app doesn't mean you won't lose your shirt if you don't follow safe rules.
So what are these so-called safe rules? And don't give me the usual only invest what you can afford to lose. Everyone knows that line.
Fine. Rule number 1, and this one's controversial. Do not chase altcoins in 2025. The hype is over. In 2021, meme coins like Dogecoin or Shiba Inu made people millions. But in 2025, those coins are dead zones. You might see TikTok influencers pumping some AI coin or metaverse token, but they are traps. Beginners should stick to Bitcoin and Ethereum only.
So basically you're saying be boring. Just park your money in the old man coins and call it a day.
Call it boring, I call it safe. Every beginner I've seen try to jump on hype coins ends up being exit liquidity. If you're new, Bitcoin and Ethereum are the only playgrounds you should enter. Period.
I'll admit, I partly agree. But what about Solana? It bounced back hard in 2025. That's not exactly a dead coin.
Fair. Solana has credibility now, but notice something. It's not a new meme coin. It has a solid ecosystem, massive developer support, and real adoption. That's the difference. Beginners can't tell the difference between a legit project and a scam. So, the safe rule is, stick to coins that have stood the test of time.
All right, let's say our beginner sticks to Bitcoin, Ethereum, and maybe Solana. What's rule number 2?
Rule number 2, get your coins off the exchange. This is where people roll their eyes and say too much work. But remember FTX in 2022, billions gone overnight. Guess what? Smaller collapses are still happening in 2025. Exchanges get hacked, wallets freeze, governments block withdrawals. If you don't own your keys, you don't own your crypto.
Now this is where I think you're fear-mongering. Big exchanges like Coinbase or Binance, they're practically banks now. Do you really expect beginners to buy a cold wallet, set it up, and worry about losing their seed phrase?
Yes. That's the cost of safety. Leaving your coins on an exchange is like parking your car in the middle of the street with the doors open. Sure, it might be fine today, but when something happens, you're done. Beginners need to learn this from day one. Custody matters.
I'll admit, FTX was a wake-up call. But come on, do you really think Coinbase is going to vanish tomorrow?
I don't know. No one thought Lehman Brothers would collapse in 2008 either. Safety isn't about what's likely. It's about being prepared for what's possible.
All right, I'll give you that. But beginners also struggle with the tech side of wallets. If they mess up a transfer or lose their keys, their coins are gone forever. Isn't that worse than trusting a regulated exchange?
It's a risk, yes, but here's the uncomfortable reality. In crypto, you are the bank. That responsibility scares people, but it's the trade-off for independence. You want the upside, you need to take responsibility.
Sounds like your safe rules are more about discipline than actual investing strategy.
Exactly. Beginners lose not because crypto is broken, but because their habits are. Chasing hype, leaving coins exposed, thinking short-term, that's what destroys them.
So what's next? If Rule 1 is stick to time-tested coins and Rule 2 is self-custody, then what's Rule 3?
Rule 3 is going to make a lot of people angry. Beginners should not trade.
Not trade. That's half of what makes crypto fun. The thrill, the charts, the leverage, the profits. You're telling beginners to sit on their hands?
Exactly. Trading is where beginners get slaughtered. And in 2025, the whales are smarter than ever. They use bots, AI-driven strategies, insider info. You, the beginner, with a $500 account, are not going to outsmart them.
So you're saying just buy, hold, and do nothing? That sounds like you're turning crypto into a savings account.
No, I'm saying beginners should focus on accumulation, not gambling. There's a difference.
All right, let's pause there because I have a lot to say about this don't trade idea. All right, let's go back to what you just said. Beginners shouldn't trade. I think that's ridiculous. Trading is what makes crypto exciting. Look at social media right now. Thousands of traders post their wins every day. Are you saying all of them are lying?
No, not lying. But most of those wins are cherry-picked. Nobody shows the 10 losses before that one big gain. Beginners scroll through TikTok or Twitter, see someone make $5,000 in a week and think, I can do that too. But here's the controversial truth. For every one person bragging, there are hundreds quietly losing everything.
That's true in stocks too, though. Trading always has winners and losers. Isn't that just part of the game?
It is, but the difference is speed. In traditional markets, bad trades can hurt you slowly. In crypto, with 50x leverage available at your fingertips, you can go from beginner to broke in a single afternoon. That's why I say no trading for beginners. They don't need fun, they need survival.
So what do they do instead? Just buy and sit forever?
Pretty much. That's the essence of Rule 3. Buy, hold, accumulate, and don't get tempted into daily trading. Beginners should treat crypto like a long-term portfolio, not a casino.
Okay, but let's be real. If someone just buys Bitcoin and Ethereum and holds, how do they even make money? Bitcoin's already expensive. Isn't it too late for beginners to get life-changing returns?
That's another myth. People said Bitcoin was too expensive at $1,000, at $10,000, at $30,000. And here we are in 2025, still hitting new highs. Beginners don't need to buy a full coin. They can start with $50. The point isn't to get rich overnight. The point is to build a position that grows with adoption.
But that patience thing, most beginners don't have it. They get restless. They want action.
And that impatience is why they lose. Look, here's the harsh truth. If you can't handle waiting, crypto will punish you. Beginners need to rewire their mindset. It's not about timing the market, it's about time in the market.
Okay, fine. Let's say they listen to you, they buy Bitcoin, maybe Ethereum, move it to a wallet and hold. That's safe, but also boring. Isn't there a middle ground where they can take smart risks?
Yes. And that brings us to Rule 4. Only invest in projects you understand deeply. Not, I saw it on TikTok. Not, my friend said it's the next big thing. If you don't know what the coin does, how it works, and who's behind it, don't touch it.
But that automatically cuts out 90% of coins. Most beginners don't have the time or the skill to research tokenomics or development teams.
Exactly. Which is why they should stay out of most coins. Look, crypto in 2025 is flooded with AI coins, Metaverse 2.0 tokens, decentralized gaming credits. 90% of them are vaporware, just fancy websites and promises. Beginners don't realize that by the time they hear about a coin, insiders have already pumped it and are dumping on retail buyers.
So you're basically saying if you don't understand it, don't invest? That sounds almost too simple.
It is simple, but beginners hate simple. They want the next hidden gem. They want a lottery ticket. And that's why they lose.
All right, but let's flip this around. If beginners only stick to safe plays, aren't they missing out on the next Ethereum or Solana? Back when those projects were new, people who invested early made fortunes. By your rules, beginners today would have missed those opportunities.
True. And here's where I'll be brutally honest. Beginners will miss the next Ethereum. That's okay. Crypto isn't about finding the one magic project. It's about surviving long enough to actually benefit from the good ones. Too many people blow up their accounts chasing the next big thing and never even hold on to the proven assets.
That's controversial, I'll give you that. You're basically telling beginners, accept that you'll miss the jackpots.
Yes, because missing a jackpot is better than getting scammed. The beginner's goal is not to become a millionaire overnight. It's to build wealth steadily and safely. Once they're more experienced, once they understand the market, they can start taking calculated risks, but not on day one.
All right, so we've got 4 rules laid down. But I feel like you're missing one huge thing, and that's security beyond just wallets.
Exactly. Which brings us to Rule 6. Protect your identity.
Identity? I thought this was about money.
It is. But in 2025, crypto scams have evolved. Hackers don't just steal wallets, they target you. They run phishing campaigns, fake apps, deep fake customer support calls. If beginners aren't careful, they'll give away their seed phrase to a fake Binance support agent before they even realize it's a scam.
That's terrifying, and also kind of true. I've seen so many posts where people lose everything to phishing links.
Exactly. So beginners need to learn this. Never share private keys. Never click shady links. Use hardware wallets. And treat every DM from a stranger as a potential scam. It sounds paranoid, but paranoia is survival in crypto.
So now you're saying beginners should not only learn investing, but also become cybersecurity experts? That's a tall order.
Maybe, but the alternative is losing everything. Crypto rewards responsibility and punishes laziness. Beginners need to decide which side of that equation they want to be on.
All right, this is starting to sound more like a survival guide than an investment guide.
Good, because that's what beginners need in 2025. A survival guide.
So far, you've made beginners sound like soldiers entering a battlefield. Buy only the safest coins, hold them long term, don't trust influencers, protect your identity. At this point, some people watching are probably wondering, if crypto's this dangerous, is it even worth getting into at all in 2025?
That's the million-dollar question, isn't it? And my answer is yes, but only if you treat it with respect. Crypto is risky, yes, but so was the internet in the 90s. Everyone said it's full of scams, stay away. And yet the people who carefully participated built fortunes. Same thing now.
Fair, but here's where I want to challenge you. In 2025, governments are knee-deep in crypto. They're rolling out central bank digital currencies, CBDCs. Doesn't that kill the original spirit of crypto? The whole point was decentralization, and now we've got centralized digital money controlled by governments. Doesn't that make Bitcoin kind of obsolete?
Not at all. If anything, CBDCs prove why Bitcoin matters. Think about it. CBDCs let governments track every transaction, freeze accounts instantly, and even program expiration dates on money. That's terrifying. Bitcoin, by contrast, is censorship resistant. It's the only true escape hatch.
But most beginners aren't thinking about censorship resistance. They just want profits. Why should a beginner care about ideology when they're just trying to make money?
Because the ideology is the protection. When you buy Bitcoin, you're not just buying an asset, you're buying financial independence. Beginners might not realize it now, but when banks start limiting withdrawals, when CBDCs are used to enforce rules, Bitcoin won't just be an investment, it'll be lifeboat money.
That sounds like conspiracy talk. You're basically saying governments are going to weaponize money.
They already are. Look at the freezing of bank accounts during protests, sanctions, asset seizures. It's not theory, it's happening. Beginners need to understand this bigger picture. Crypto isn't just about get rich, it's about staying free.
Okay, but let's get practical. Let's say a beginner follows all your rules, buys Bitcoin and Ethereum, holds, self-custodies, ignores influencers, protects their identity. How much should they even put in? What's the number?
Rule 7, never go all in. Start with 5% of your income or less. That way, even if the worst happens, you're not ruined. Crypto should complement your financial life, not dominate it.
But if someone only puts in, say, $50 a month, is that even worth it? They'll never get rich that way.
Wrong. $50 consistently invested for years compounds. Beginners underestimate time. If Bitcoin doubles every 4 years, which historically it has, even small investments grow huge. The point isn't get rich tomorrow, it's set your future self up to win.
So you're saying slow, boring, patient. That's the safe game.
Exactly. And here's rule 8, maybe the most important. Don't quit when it gets ugly. Crypto has brutal cycles. 80% crashes are normal. Beginners panic sell at the bottom every time. The safe rule is hold through the storm.
Easier said than done. Imagine watching your $5,000 investment drop to $1,000. Most people won't hold.
That's why I say only invest what you can afford to forget about. If you treat it like rent money, you'll panic. If you treat it like long-term stash, you'll survive.
You know what? I think that's the part nobody tells beginners. They get hyped during the bull run, then abandoned during the crash.
Exactly, which is why survival is the real skill in crypto. Not chasing jackpots, not trading 24/7, not worshiping influencers. Survival.
All right, let's recap. The safe rules for beginners in 2025 are stick to proven coins like Bitcoin, Ethereum, maybe Solana. Get coins off exchanges. Self-custody matters. Don't trade. Focus on long-term accumulation. Only invest in what you understand. Don't trust influencers blindly. Protect your identity from scams. Never go all in. Small, consistent buys. Hold through the storms. Don't panic sell.
That's it. 8 rules that sound boring, but they work.
And, of course, the controversial kicker, beginners shouldn't chase the next big thing. They'll probably miss the jackpots, but they'll still build wealth safely.
Exactly. Missing a jackpot is better than losing everything. In 2025, safety is the winning strategy.
All right, I'll admit, I came in thinking you were being too cautious, but for beginners, this might actually be the smartest play.
And that's the truth about crypto in 2025. Not the hype, not the get-rich-quick nonsense, just safe rules for beginners who actually want to survive this market.
Thanks for watching Money Map Studios. If you found this video helpful, don't forget to hit like, subscribe, and turn on the bell so you never miss practical tips to grow and protect your money. And remember, this content is for education only, not financial advice. Always do your own research and consult a professional before making decisions. Until next time, keep mapping your money and building your future.